Our industry is moving faster than ever. Where are freight volumes headed? How will this affect capacity? And of course, what's the newest technology that can benefit your business? Those questions and many more will be answered at the industry's hottest Freight Tech Conference this November in Chicago. Come join us at FreightWaves Live November 12th and 13th at the McCormick Center. Visit FreightWavesLive.com to register.
Welcome to the Weekly Rate Update. I'm your host, Craig Fuller, here with John Paul Hampstead, right from Freight Alley in Chattanooga, Tennessee. It's Friday the 13th, which also means a lot of stuff is happening in the market, as always. It'll be in mid-September. Got a harvest moon tonight. My son and I are excited to go out and watch it in the sky. JP, what is happening?
It's pretty interesting. I mean, we've seen in the past couple of weeks a lot of the truckload carriers give positive guidance kind of for the first time in a while. I know that Susquehanna initiated coverage on a bunch of truckload stocks with buy ratings, kind of saying that, you know, you still might see negative year-over-year comps on contract and spot, but things are starting to move back up. Maritime rates, so from China to the West Coast, China to the East Coast, those steamship lines did general rate increases earlier this month. Those appear to be mostly holding. And so I think things are looking pretty good.
Yeah, I mean, we have some reprieve, or at least signals of reprieve on tariffs. At least escalation seems to be put on hold for now. But, you know, literally one tweet away this weekend, who knows? So I won't put a lot of trust in sort of the long-term game there. We'll see where that goes. But certainly sentiment is better. And as you mentioned, Morgan Stanley had their conference this week.
Right.
Schneider, U.S. Express, Werner, all had positive comments. Landstar actually came out and pre-reported, but I believe Landstar has, of all the carriers, they have owner-operators, BCOs as they call them, and a lot more exposure to that spot market.
That's right.
And so, and also they have a substantial logistics operation, which means they're buying a lot of capacity. So they have spot, that spot contraction. I would actually expect that the brokerages, in terms of margin outlook, is probably pretty murky right now.
That's right. Earlier this week, I wrote about UBS analyst Tom Wadowitz. He wrote a note on C.H. Robinson after some conversations with management. Most of the note was largely positive around some of their investments in technology, but he did say, I mean, he held it at a neutral rating and said near term, margins are going to get hit, going into peak season.
I've had a lot of conversations with larger brokerages and 3PLs, many of them really quick growing 3PLs and senior executives. There's a lot of, I think the common shared view is that really those peak margins are probably behind us. It's basically a secular decline in peak margins.
Oh, interesting.
And so it's as we go through this cycle, we're going to see margins compress as they
and they might not come back.
And they may come back to a level that's still, great, but if you're thinking historical averages are 17%, the next sort of peaks may be 14, 13, and as we go through the cycles, we may see continuous pressure on those margins as companies like Uber Freight and Convoy, and frankly, there's so many fast-growing brokerages out there, and it seems like every week someone's expanding, that it's hard for those guys to keep up. It's completely an arms race of opportunity out there.
Yeah, and on the 3PL side, Ross Spanier, the Senior Vice President of Sales at Global Trans, got in touch yesterday and was kind of saying similar things about expect positive inflection on spot rates to the point where they could actually get above contract for maybe a little bit before dropping back down.
That's just related to just peak.
Yes, right. He said that, interesting, he called out a data point from UPS. UPS said that they expect their daily peak volumes to double year over year from 20 million packages a day to 40 million packages a day. Yeah, so if you think about what that demand picture looks like and the way that e-commerce and faster deliveries have sort of, sort of multiply the number of moves that actually occur during peak.
Yeah.
That's really interesting, and we'll see how that plays out for truckload carriers and brokerages.
Yeah, the economy, at least as it relates to the consumption economy, the retail economy, seems to be doing exceptionally well this cycle. In fact, a lot of the big retailers, the big box retailers, are actually talking about expanding margins. Are very positive on the season. Some of the more distressed properties, where you see bankruptcies, is really distressed, either niche brick and mortar retailers that can't compete because they don't have anything differentiating themselves, or you see some of the sort of lower quality names, more dated experiences seem to be suffering. But as a sector, the retail market, particularly companies that are really good at e-commerce, are doing exceptionally well.
That's interesting. Yeah, I think the future of retail has to just be like lowering friction. Like don't convince me to drive across town to walk inside your store. Like, find me on social media in my device in my pocket and show me what you think I already want to buy.
Yeah, I got to ask you a question. How many boxes show up at your house a day?
Two.
Yeah, I'm probably. We got a new baby, so we're at the 8-ish.
Okay.
So we have an infant about 6 months old, and my wife doesn't go shop. Like everything comes and it's everything from formula to diapers. It just drop ships, and UPS is at our house 4 or 5 times a day, it seems. They're just bringing in different packages. I should say different parcel deliveries are there a couple times a day. I think UPS only comes once. So JP, when we're thinking about what you're seeing going forward in terms of rates themselves, spot rates, what are you hearing?
No, people expect them to go up. People have said that they really can't go lower. They can't, on a national basis, they can't average below the operating costs of truckload carriers for any appreciable amount of time. I mean, obviously, in any given backhaul load could be under operating costs, but on a national average, it just can't, because people will go out of business until it comes back up. So,
yeah, for sure.
So they're basically saying they're not going to go lower. Everyone thinks it will go higher. If you look at the forward curves for the national average in this spot month in September, it suggests market participants expect to move upward of about 7 cents a mile to about 147 a mile.
Is that for October, November? Or?
Oh, that's for the spot month of September.
Oh, September. So we're seeing, we very well could see the average up 7 cents a mile by the end of it. We rolled something out last week called the Pricing Power Index, which is basically a gauge that shows who has the pricing power. When it first was released, it showed the favor to the shippers. So there was if you take it from 0 to 100, 50 being anything above 50 is favored carriers, anything below 50 favors the shippers. When we rolled it out, it was at 35. That's actually increased to a 45, which means that arm wrestling between the shippers and carriers is almost at equilibrium. We're not there yet. Shippers still have some advantage, but they're losing that advantage as we go later into the cycle.
The trend is really clear. I think pretty much all the data that we're seeing from different modes, kind of tell us that there's going to be a lot of volume this peak, that shippers who are concerned about capacity are going to have to pay a little bit more for reliable service. One of the interesting things that I wanted to tell you about yesterday, Henry Byers floated this really interesting sort of early leading indicator for Asian volumes hitting the West Coast, right? So one of the questions is, how do we know what those port volumes are going to be ahead of time? Well, one way to look at it is to look at sort of maritime tenders on the Asian side, the Asian ports, right? What are they putting on boats? But you can actually get even earlier than that. And he said that you can actually see those shippers preparing for big moves when they recall empty containers to Asia.
Got it.
And so if you look at the weekly count of empty 40-foot containers that go from Chicago to LA, right, and then they're going to go back on a boat and then come back loaded eventually, he said that is actually the earliest leading indicator of Asian exports to the U.S. And that number is going up. It's going like straight up. It's really volatile. It's not steady. It seems like they send a bunch of stuff out, and then it kind of like moves, it circulates, and then when they know there's a push coming, they start calling things back. And we saw it last year as well. But that number looks really, really good going into peak.
It's interesting. I've been reading a lot about the Chinese consumer economy, the domestic economy. And that spending has slowed down, growth has slowed down, domestic consumption has slowed down. But they're still producing because the government, the central government, is still encouraging investment and production, which is actually in some ways countering. So they're flooding our market full of cheap goods simply because they have so much excess.
Yeah, and they can do things with their...
There's no capital. I mean, traditional capital markets, as it relates to sort of market regulation, and I'm not talking about government regulation, sort of market forces, are not as apparent in China as what they are in other parts of the world.
And one could argue maybe not even here anymore.
Well,
right?
We continue to chisel away.
It's like we have people talking. Google searches for the recession at a multi-year high. The Fed's easing. The S&P 500 is at an all-time high.
And you have cheap capital, and you're going to negative interest rates. It's a weird time. We're into a very different economy than we've ever seen. And I think that's why the data gets very confusing at times, or at least the interpretation of the data, because these historical models start to break down when you have trends that just don't follow it. And there's so many factors, whether it's trade, the way trade's being handled, the way capital's being handled. You have Brexit. A lot of conversation about Brexit and what that's going to do to the British economy. I mean, they're talking about supply shortages of critical goods, whether it's medicines or food. I mean, this is like an apocalyptic, if you read sort of the headlines, they're talking about sort of apocalyptic conditions that you would expect. It's just a very strange time.
It is, and people, to your point about historical models breaking down, there are people who say, the yield curve doesn't matter, it's different this time, whatever, and who really knows? But one of the things I like about what we do is you can't go wrong tracking the physical movement of goods, right? And transportation assets.
And volume, the interesting thing is there's a lot of conversation where people talk about it's an overbuild, it's overcapacity, or there's, just more capacity, and that's sort of driving, it feels like a recession, but it's not because volume. The best and most reliable indicator from my point of view is to look at those contract rate tenders, the tender transaction, the OTVI that we have. It's up. It's at a 106 right now, which is actually really, really positive.
Yeah, it's about 3.7% above year over year.
Yeah, so that's great. Yeah. And there is a little bit of excess capacity in the market. The question is how much of that's churning out. Right. Certainly, if employment stays tight, that will actually create pressure on driver coming into the market.
And I think when we keep in mind for rates, during peak season is a time when service is more important than price.
Yeah, absolutely.
You know what I'm saying? So it's like you could have a lot of new capacity in the market, a lot of unreliable people may not be super experienced at running their business. They might be the type to fall off of loads.
I also think shippers, particularly retailers, and you think about retail season, it is a game of where market share. I mean, if you think about it, for the amount of volume that pushes, these large behemoths control a vast majority of the retail volume, whether it's Amazon, Walmart, Target, Best Buy, you name these big box retailers as a portion of the total retail market. They're very significant when it comes to peak, particularly in the e-commerce sector, where it's even more concentrated. Right. And that capacity tends to favor the larger, fleets that benefit from it. I think Amazon's built out its owner-operator fleet or its variable capacity fleet, where it's a little bit different, and they're taking some of that capacity from the broader spot market. But certainly the big box retailers like Walmart and Target tend to depend on those larger fleets. They're not hiring as much independent contract capacity, or frankly using as much spot brokerage capacity as they will go to the larger asset-based carriers. So I think that's a good thing for, we've seen, as you mentioned, the stock market, at least the equities in trucking seem to be I wouldn't say on fire, because when you're at a really low, I mean, they were at like historic, 5-year lows in this past cycle. So in this past couple of weeks, we're starting to see those at least rally short term. Is it a short-term, short covering rally? We don't know. But what we do know is there seems to be a lot of upgrades around Wall Street and favoring a lot of those truckload stocks.
Yeah, I mean, the way that Wall Street trades them is a lot of times has to do with spot markets and contract pricing, and they of course buy them low and sell them high. But they try to time these cycles.
These are great trading vehicles because they're very predictable in terms of the cycle.
They're predictable and they move a lot.
Yeah.
So that's why
they move within bands. They don't just they never go out of Rarely do you see
it's not a tech stock.
Year over year. It's not a tech stock that can grow 1,000% in the next 5 years and then drop 20%.
Right. So if you understand the physical economy,
they can drop 20% in a day, but they don't go up 1,000% in 3 years. So.
Yeah. So that's what's cool is that you do get a lot of really intense interest in these cyclicals because it is possible to time them. It is possible to make a lot. Obviously, we're not allowed to trade them, but the research on them tells us a lot about the industry.
Yeah, for sure. Well, in disclosure, I through a trust, I own some of U.S. Express, and so I have exposure. I'm not selling. I'm not trading in and out of the stock. So I'm long. So I want the asset guys to do well. But it's been a tough year for truckload stocks. But hopefully we'll see that return. Fundamentals are going to matter, and market conditions certainly matter as we go into this next year. And I'm as just an industry sort of sentiment, I'm certainly bullish on the direction of the market and bullish on volumes. And we'll see what happens next year. I mean, a lot of factors could affect 2020, whether it's the election cycle that we've got coming up, whether it's some of these geopolitical pressures that seem to be at a factor, some monetary policy, a lot of things that could potentially impact the growth cycle of 2020. The good news is a lot of that will probably impact the spot market much more so than that long-term committed market in terms of pressure. I don't think we're seeing a lot of downward pressure in that contract rate. We're just not seeing acceleration.
That's easing, yeah, definitely. Only the most aggressive shippers are still asking for contract
And they may
reduction.
regret that if rates come back, if we see things like the drug and alcohol clearinghouse impact capacity. We see the new ELD, AOB, or the conversion from AOBRs to ELDs that certainly could impact it. Potentially things like IMO 2020, which there's a lot of differing views on whether that has any impact. So we'll see. It's going to be an interesting season. Yeah, certainly looking forward to it.
And I think the next few weeks will tell us a lot about just what the retail season is.
And there is a tropical storm that's also building off the coast of Florida.
Right. And that's supposed to rain on the Bahamas in a couple days, and
I was at an airline yesterday, and they were bringing in planes to just get people off the island, and supply. It brings in supplies and take out for humanitarian relief. And so certainly, our thoughts are with the folks in the Bahamas as they go through this, and hopefully this tropical storm will just
kind of
go away.
Yeah, disorganize and go away,
or change paths. So JP, great week. Good luck next week, and we'll be back.